Hello students, a warm welcome to all of them. I hope you all are doing good and fine. As in a previous session, we had completed the chapter number 5th, that is employment income. And in our today's session, we will be starting with the chapter number 6, that is pensions. As in a previous session students, under the topic of income tax computation format, we had seen that non-saving income had many types of income like trading income, property income, employment income and the pension income students. And in a previous session, we had seen that employment income or the property income, either they will be taxed on cash or accrual basis, and we had covered a lot of topics relating to these income heads. And in our today's session, the chapter number 6, pensions, we will be covering topics like whether pension income will be taxed on cash or accrual basis, types of pension schemes in UK, and the tax relief which is available for an individual who contributes money into the pension schemes. So before starting our today's class, we'll take a short introduction of the term pension and how the pension income is generated, students. So let's take an example of an individual. Let's take an example of an individual X. He is a UK resident. UK resident. To earn money, either he will be employed or either he will be self-employed. Means either he will be working under someone or he will be running his own business, students. I hope this is clear. To generate money, to generate income so that he can pay for his day-to-day expenses and have a good life. Now, this individual, when he reaches certain age, when he gets retired or when he becomes old, he will not be able to work as the same manner he used to work before to generate the income. So when he reaches a certain age, he will not be able to work. He will need money to live his life, to pay for his day-to-day expenses when he get old. So to get this income, this individual, the X individual, what he will do, students? No, he will invest the money which he earns during his life in some pension funds like pensions or some other funds, so that this fund will invest this money in other companies or capital markets or real estate, and they'll generate the return. And when this individual X, when he reaches certain age, the amount which he has invested in this fund will provide the individual with a regular income each month, each quarter or yearly. So the amount invested by the X will be the initial amount plus the return. So this amount will be then used by X so that he can live his life peacefully and pay for his day-to-day expenses. The income which he will receive will be known as pension income, students. Will known as pension income. And this fund will either be managed by the UK government or by big companies like the insurance company and etc. I hope the picture of pension income is clear. Now moving to our next slide, students, we will be seeing the chapter learning objectives. So we will be seeing what all we will be covering under this chapter, like whether the pension income will be taxed on cash or accrual basis, the types of pension schemes and the relief that is available to an individual. Explain and compute the relief given for contributions to personal pension schemes and to occupational pension schemes. So these are the two types of pension schemes in UK. So in UK we have two types of pension scheme, students: personal pension contribution or occupational pension schemes. Personal pension schemes or occupational pension schemes. Excuse me. Now, starting with the first topic, whether pension income will be taxed on cash basis or accrual basis. The receipt basis does not apply to pension income. So receipt basis means cash basis, students. Cash basis will not apply to pension income. If cash basis will not apply, then accrual basis will apply, students. Then accrual basis will apply. Pension income is taxed on the amount occurring in the tax year. So if the pension income relates to this year and we have not received it yet, it will be taxed in this year only, students. So the period of the pension income will be relevant rather than it is received or not received is irrelevant. Pension income is taxed on the amount occurring in the tax year, whether or not it has actually been received in the tax year. I hope this is clear, students. So pension income will be taxed on accrual basis, student, not the cash basis. I hope this first topic is clear. Now moving to our next slide. This is a general theory, students. You need to have a idea of this. An individual can set up an investment of funds to provide an income during retirement. So an individual will contribute an money to its funds, or he'll invest in any fund so that he will generate an income during his retirement in a tax efficient way. So the investment which he will be doing in this fund will be in a tax efficient manner. Will be in a tax efficient manner means he will be getting tax relief by making payments into a registered pension scheme. So the fund must be invested into the registered pension scheme to avail the tax relief. To avail the tax relief. A pension scheme is a saving plan for retirement that enjoys special tax privileges, but only if the scheme is registered with HMRC. So students, to avail the tax relief for the pensions, the scheme must be registered with HMRC. The scheme must be registered with the HMRC. Investing in a pension scheme is a long-term investment and is very tax efficient for the following reasons. Individual obtains tax relief on the contribution made into the scheme. He will be getting tax relief on the contribution made into the scheme. Where an employer contributes into the scheme, tax relief for the employer contribution is available without there being a tax benefit for the employee. In our previous chapter, student, under the exempt benefit, we have studied that whatever contribution the employer pays for the pension purpose, whatever pension contribution the employer pays for his employee, for the employee, it will be a exempt benefit. It will be a exempt benefit means it will not be a taxable benefit, no tax on it. And when the employer pays, for the case of the employer, it will be an allowed expenses. We'll be seeing in our chapter number 7 this in more detail. Pension scheme funds grow tax free as the scheme is exempt from income tax and capital gains tax, student. The pension scheme will grow tax free because it is exempt from income tax and the capital gain tax, students. When taking the pensions, some funds can be withdrawn as a tax free lump sum amount. So the amount which I have invested in the pension scheme, students, when I get old, I will be withdrawing the fund from this. When I withdraw a lump sum amount, certain amount of lump sum amount will be tax free. The lump sum amount which I withdraw will be tax free. So we have a limit on the lump sum amount. Will be covering the further slides also, this also. So this slide will give you a basic introduction and some general points about the pension scheme, that it must be a registered pension scheme to avail the tax relief, and if the contribution by the employer is made for his employee will be exempt, and we can withdraw some amount, a lump sum amount, tax free. So to avail the tax relief, student, it must be a registered pension scheme. So registered pension scheme. So registered pension scheme, we have seen there are two types of pension scheme: occupational pension scheme and personal pension scheme, students. Now occupational pension schemes and personal pension schemes, who can all pay in these schemes? If a person is an employed person, means if an individual or a person is employed, means he is working under someone, in that case this person can contribute into the occupational pension scheme also and the personal pension scheme also. So if an individual who is employed can contribute in occupational pension scheme also, personal pension scheme, and both also, either in occupational, either in personal, or both also he can contribute. But when coming to the case of self-employment, student, a person who is running his own business can only invest in personal pension scheme, students. Only self-employed can invest in personal pension scheme. So if an individual is self-employed, he cannot invest in occupational pension scheme. So in this chapter we'll covering topics relating to tax relief, methods of obtaining the tax relief, because one amount will be the tax relief, the maximum amount which tax relief will be available. The method of obtaining tax relief means for both the pension schemes we have different methods to claim the relief. I hope this is clear. Then calculation of annual allowance charge, accessing pension funds, and impact of lifetime allowance. These all will be covering students, and these 5 areas are very important for your examination. I hope it is clear. This slide is clear. This gives a flow chart of this chapter. Now moving to our next slide, types of pension schemes. The two main types of pension schemes are, students, occupational pension schemes and the personal pension scheme. I hope this point is clear. In UK we have two types of pension scheme. Occupational pension scheme, which can be paid by employed person only, but when coming to the case of personal pension scheme, it can be paid by, a person can invest in this scheme by either if he is employed or self-employed. I hope this is clear, students. A self-employed or unemployed individual can only set up a personal pension scheme. A self-employed or unemployed individual who is not employed, a self-employed or unemployed individual can only invest or set up a personal pension scheme, But if an employed individual may join an occupational pension schemes provided by her or their employer, means the occupational pension scheme will be managed by the employer. The employee may be automatically enrolled depending on the size of the employer. Choose not to join the employer scheme and set up a personal pension scheme, or contribute into both his, her or their employees' occupational pension schemes and set up a personal pension schemes. So, in case of self-employment, he can only set up a personal pension scheme. But in case of employed person, student, the employed person can contribute either into the occupational pension scheme, which is set up by his employer, or private, or he can invest in the personal pension schemes, or he can invest in occupational pension scheme also and personal pension scheme. I hope this is also clear. This is also an basic theory of this chapter, students. Now moving to our next slide, occupational pension schemes. Now we will be going through the occupational pension scheme in more detail, students. An occupational pension scheme is a scheme set up by a specific employer for the benefit of its employees. So the occupational pension scheme will be set up by a employer for the benefit of his employee, students. The employer may use an insurance company to provide and run a pension scheme for employees. If the employer is not able to manage himself the pension scheme, he can tie up with the insurance company so that the insurance company manages everything for all the employees. Or it may set up its own administrated pension fund. Either the employee can set up its own administrative pension scheme, or either they can partner with the insurance company to run the pension fund. Contributions into a pension schemes may be made by both the employer and the employee. So the pension contribution into the occupational pension scheme, that is, which an employer set for his employee, employer can also contribute and employee can also contribute, students. In this scheme, employer will contribute and employee also can contribute. If employer contribute, it will be an exempt, as we have studied in a previous chapter under the head of exempt benefits. I hope this is clear. And the employee also can contribute. So in case of occupational pension scheme, it is a pension scheme which is set up by an employer for the benefits of its employee. The employer can set up a self-administrated pension fund or partner with the insurance company. And the contribution into the pension scheme for the employee can be paid by the employee itself, or the employer can also pay, or both also can pay into the same pension scheme. Now we will be studying, students, the types of occupational pension scheme. As we have seen in UK we have two types of pension scheme: occupational pension scheme, personal pension scheme. And in occupational pension scheme we have two types of schemes: defined benefit scheme, money purchase scheme, or defined contribution scheme, or money purchase scheme. So let's look into this topic in more detail. Type of occupational pension scheme, students. Defined benefit scheme. From the word only we can identify, student, defined benefit scheme. So my benefit will be defined. My benefit will be defined. What will my income? What will be my income when I get retired? That income will be defined. That income will be defined. The benefits obtained when taking the pensions are linked to the level of earning of the employee. Level of earning of the employee during employment. So the benefits will be based on the level of earnings of the employee, students. I hope this is clear. Now moving to the second type of money purchase scheme or defined contribution scheme. So this scheme means your contribution into the pension scheme will be defined, but your benefit will not be defined. Your benefit will not be defined. The benefits obtained when taking the pension depends upon the performance of the investments held by the pension funds. So under the money purchase scheme, students, the benefit will be based on the performance of the investments. If I am an individual X, I am investing my money in this pension fund, and if this pension fund performs better, has a very high return, so my income will be high returns, my pension income will be higher. If the low returns, if the pension scheme generates low return or is not able to perform very good, our pension income will be low. So I hope this is clear, students. Two types of pension scheme: defined benefit scheme and money purchase schemes. So in exam they can either use occupational pension scheme or defined benefit scheme, or either defined contribution scheme. Now coming to the second type of pension scheme, personal pension schemes. Personal pension schemes can be established by an individual. The individual will be either employed, self-employed, or those not working, including children. So in case of personal pension schemes, who can all invest in this scheme, students? Either the person is employed or self-employed, or those not working means unemployed, those not working, or they does not generate any income. So personal pension schemes, in these schemes all individual can contribute, either they are employed, either they are self-employed, or those who are not working. Like example, like the children, example of children's. Contributions into personal pension schemes may be made by, so in case of occupational pension scheme, student, we have seen the contribution will be made either by the employee or employer, or both also can contribute. Now coming to the case of personal pension scheme, students, who all can contribute into the personal pension schemes. In case of the individual, if I am an individual, I can invest in the firm on my behalf. My parents, my employer, my spouse, my civil partner, or all these third party can also invest on my behalf. Contribution into personal pension schemes may be made by the individual and any third party on behalf of the individual. For example, employer, spouse, civil partner, parents, or grandparents. I hope this is clear, students. This is also general theory. You need to have a knowledge about this. Personal pension schemes are usually money purchase schemes. So personal pension schemes means those are money purchase scheme, means defined contribution scheme. The contribution will be defined. Administered by a financial institutions on behalf of the individual students. So in case of personal pension scheme, the contribution will be defined, but the benefit will not be defined, student. Benefit will not be defined, contribution will be defined. Now we will see an overview of the tax relief. Now we will be studying the amount of tax relief that is available to an individual. How we will be calculating the amount of tax relief. Overview of the tax relief rules for pension schemes. The amount of tax relief available for pension contributions is the same regardless of whether the scheme is an occupational or personal pension scheme. So the amount of tax relief, students, available for pension contribution, either it is a occupational pension scheme or personal pension scheme, the tax relief is available is the amount of tax relief is available is same, but the method of obtaining tax relief for the contribution is different depending on the type of scheme. So the amount of tax relief in both the case is the same, students, is the same, whether it is occupational pension scheme or personal pension scheme. But the method of obtaining, this is the amount of tax relief. On this amount you can claim the tax relief, but the tax relief, claiming the tax relief, the method for occupational and personal pension scheme is totally different. I hope these 2 points are very clear, students. These 2 points, if you're very clear, the further slides you will be able to understand clearly. The amount of tax relief available for pension contribution is the same. So the amount of tax relief will be the same for occupational pension scheme, personal pension. But the method of obtaining the pension scheme will be different, students, will be different. I hope this is clear. Once funds are invested in a scheme, all pension schemes are governed by the same rules. So either the funds are invested into occupational pension scheme or personal pension schemes. In this case, both will be governed under the same rules. I hope this is clear. Now we will be seeing the tax relief for pensions contribution. Tax relief for pension contribution. To avail the tax relief, students, we need to satisfy two conditions. Tax relief is available for pension contribution if both the conditions are satisfied. The condition number one is pension scheme is a registered scheme. Already we have seen in a previous slide. And the individual is a resident. The individual is a resident in UK and aged under 75. Aged under 75. The pension scheme must be a registered pension scheme, students, and the individual must be a UK resident and age must be under 75. Means the individual should not be more than 75 years to claim the tax relief. I hope this point is very clear. Regardless of the level of earnings, an individual may make pension contributions of any amount into either pension schemes or number of different pension schemes. So regardless of the level of income, students, whether an income of an individual is whatever, he can invest into number of pension schemes and different types of pension schemes. So he can invest in different types of pension schemes and a number of different pension schemes. He can invest in more than one pension schemes. I hope this is also clear. These are all general theory of this chapter. Now moving to the most important topic, the tax relief. The tax relief is only available on a maximum amount, students. Now we will be seeing how to calculate the maximum amount. See, we have studied tax relief is available for both the case, it will be same, the amount of tax relief, but the way of calculating or the way of obtaining the tax relief will be different. However, tax relief is only available, the tax relief, we will be studying further what is the tax relief. Tax relief is only available up to a maximum annual amount, students. So tax relief is only available for up to a maximum annual amount each tax year, and the maximum annual amount is, students, higher of two things 3,600 or 100% of the individual's relevant earnings accessible to income tax in the tax year. So tax relief is available up to maximum annual amount. The maximum annual amount is higher of two things, that is 3,600 pounds or 100% of the relevant earning accessible to income tax in that tax year. Accessible to income tax in that tax year. Now what does the term relevant earning means? Relevant earning includes taxable trading profit. We'll be covering in our chapter number 7 this. Employment income, as we have covered in the chapter number 5, and the profits from furnished holiday lettings. This we have covered under the property income head, students. I hope during the FHL topic we had seen that FHL income qualifies for relevant earning. So today we are saying the term relevant earning. Relevant earning includes three things: taxable trading profit, employment income, and profits from FHL, that is furnished holiday lettings. So the tax relief is available only for the maximum annual amount. Up to a maximum annual amount the tax relief is available. Maximum annual amount is higher of two things: 3,600 pounds, or students, 100% of relevant earning assessable to income tax in the tax year. Now, as we have seen, students, let's take an example. If my relevant earning, my total relevant earning is 1 lakh pound, 100,000 pounds, students, and the contribution made by me into the pension scheme is 20,000 pounds. So the tax relief will be available up to this amount, maximum up to this amount. But I have only contributed 20,000, so the tax relief will be only available on 20,000. So tax relief is available on contributions up to the lower of students. The lower is of 1 and 2. The first one is total gross pension contribution paid, whatever is the gross pension contributions paid, and the second one is maximum annual amount. And we have already seen the maximum annual amount is higher of 3,600, or 100% of the individual's relevant earnings assessable to income tax in the tax year. I hope this is clear, students. So the tax relief for the pension contribution will be lower of 1 and 2. One is total gross pension contribution paid, and the second one is maximum annual amount. So the maximum annual amount will be, students, higher of 3,600 pounds, or 100% of the individual's relevant earning assessable to income tax in the tax year. So this rule is very important, students. This you need to keep in mind, because this is the amount on which tax relief is available. And further we'll be seeing how the tax relief will be available. What is the method of obtaining the tax relief in both the cases, occupational pension scheme and personal pension schemes. So tax relief is only available up to a maximum amount, that is maximum annual amount, but we'll be using this formula to get R. Because, students, as given by me example, if 50,000 is our maximum annual amount and we have only contributed 10,000, so relief will be only available on 10,000, because we are only contributing 10,000. So we are taking lower of total gross pension contribution paid, maximum annual amount. I hope this is clear. We will be doing questions so that this point gets clear, and this point is very important, students, to avail the tax relief. The maximum annual amount applies to the total gross contributions made into all the schemes. So the maximum annual amount, students, applies to all the schemes. It applies to all the schemes. An employee contributes to both occupational and personal pension scheme because he is an employed person. An individual contributes into more than one pension scheme, personal pension scheme, employed, occupational, and personal pension scheme. When coming to the case of individual will contribute to personal pension scheme either in one or more. An individual, students, an individual with no relevant earning can still obtain tax relief on gross contribution of up to 6,000 pound per annum. As we have seen, student, tax relief will be available lower of two things, that is total gross pension contribution paid, maximum annual amount, that is higher of two things. Number one, 3,600 pounds, students, and 100% relevant earning. So higher will be, if our relevant earning is 0, this will be 3,600, and we can claim up to 3,600. If an individual does not have any relevant earning, also he can claim tax relief up to 3,600 pounds. This 3,600 will be provided in the tax rate and allowance sheet in the examination. I hope this is clear, students. So tax relief, the amount on which tax relief is available is maximum up to, is tax relief is available up to maximum annual amount. Maximum annual amount is higher of 3,600 pounds or 100% of relevant earning. But if we contribute lower amount, on the lower amount only, if we contribute less amount in the person, the total gross pension contribution is less, then in that case it will be lower only, students, as we have seen in this formula. Now we'll be solving one question so that we get a good idea about this topic. Tax relief for pension contribution. First we'll be seeing the maximum amount, then we'll be seeing the method of obtaining the tax relief. So students, here in a question number 1, the following individuals made gross pension contributions into a personal pension schemes in the tax year 23-24. X, N, Y, K, N, X and Y. These are persons or individuals who have contributed to the pension contribution. So, explain the maximum amount of pension contribution for which tax relief is available. So, we need to calculate the maximum amount. What is the maximum amount on which pension contribution, maximum amount of the pension contribution on which tax relief is available? So, as we have seen, the formula for tax relief for the maximum will be calculating, students, lower of 1 and 2. First one is total gross pension contribution paid. This will include all occupational pension scheme also, students. Now to the second case, that is maximum annual amount. Maximum annual amount is higher of two things, students, that is 3,600 pounds and 100% of relevant earning. I hope this is clear, students. Relevant earning, as we have seen already this formula. So now we'll be seeing the tax relief, the maximum amount of pension contribution on which tax relief is available in the case of X. In the case of X, students, 1 and 2 will be lower. So the first case will be total gross pension contribution paid, that is 2,500, and in the second case, the second one will be higher of two things, 3,600 or relevant earning. Relevant earning is 0. So which is higher, students? 3,600 is higher. So the tax relief will be available on the amount which we have contributed, that is lower of 2,500. 2,500. Now student, in the for N it will be tax relief will be lower of 1 and 2. Excuse me, 1 is pension contribution. So the pension contribution will be, students, gross pension contribution 6,000. Relevant earning is 0, and but we can claim maximum up to 3,600. So this will be, students, lower of. So the tax relief which is eligible for the amount of tax relief, the amount on which tax relief can be claimed is 3,600. Above 3,600 we can't claim the tax relief, students. We can't claim the tax relief. Only we are calculating here the tax relief amount. How we will be earning the tax relief will be seen further, students. Do not confuse between these both. The method of obtaining the tax relief will be different. In case of X, tax relief will be lower of 1 and 2. So contribution is 36,000. Total gross pension contribution, only they have given 36,000, and maximum annual amount higher of 3,600 or relevant earning. Relevant earning is, students, 75,000. So the maximum amount of pension contribution on which tax relief is available, student, is lower. Lower is, here see, students, the lower amount is 3,600, and here it was 36,000. This is 36,000. So 36,000 is the amount on which tax relief will be available, students. I hope this is clear. It is higher, so 75,000 will be the higher value. So in 1 and 2, which is the lower? 36,000. See here, students. I hope this is clear. Now for Y, For Y, the tax relief will be lower of 1 and 2. 1 is total gross pension contribution paid, maximum annual amount, higher of 3600 or 100% of relevant earning. So this will be, students, this will be 45,000, 45,000, and maximum annual value 3600 or 100% relevant earning. 100% relevant earning is 38,000, students. So 38,000. So 38,000, which is lower, students? Lower is 38,000. So 38,000 is the maximum amount on which tax relief will be available. Now we will be seeing, in case of occupational pension scheme and personal pension scheme, how we will obtain the tax relief, how we will be earning the tax relief, how we will be benefiting, This is the maximum amount. This is the maximum amount. This formula is clear, I hope, students. And the above amount, like the difference for students here, 7,000. On this 7,000 will not attract any relief. Now, I hope by solving this question, we were able to calculate the maximum amount of pension contribution on which tax relief is available. That is lower of 1 and 2. 1 is total gross pension contribution paid, and maximum annual amount is higher of 3600 or 100% of relevant earning. I hope this is clear, students. Now moving to our next slide, students. So as we have seen, registered pension scheme, occupational pension scheme and personal pension scheme, contribution made by an individual. So tax relief is available each tax year on the up to the maximum annual amount. So tax relief will be available up to lower of total gross contribution paid, maximum amount that is higher of 3600 or 100% of the individual's relevant earning assessable to income tax in the tax year. Relevant earning includes these three heads: taxable trading profit, employment income and FHL income, but not investment income. So this is also very important point, students. This is very important point. Contributions not attracting relief. As we have seen, the contribution made by an individual is 50,000 gross, but we can claim lower of 1 and 2. So this is 50,000. The maximum annual amount will be, students, 30,000 only for this example. So tax relief will be available on lower. So 30,000 on this only tax relief will be available. So the excess, this 20,000 on this tax relief will not be available. An individual can also make contribution to their pensions arrangements which do not attract tax relief. So tax relief is only available on up to a maximum annual amount. For example, out of the capital, means they can invest huge sum of money, but some amount only will eligible for the tax relief. The member must notify the scheme administrator if they make contribution in excess of the higher of their UK relevant earning and the basic amount. The basic amount is 3600. So if they are contributing more than the maximum annual amount, if they are contributing more than this amount, then it will be, students, they need to notify the scheme administrator. Such contribution do not count towards the annual allowance limit, students. So when we are calculating the annual allowance limit, will be covering further the annual allowance and the lifetime allowances. But the excess, in our case it was 20,000, this excess will not be used in calculating the annual allowance limit. So in case of annual allowance limit only, we will be seeing the 30,000. This point is very important, students. Please do keep in mind. This point is very important for our further calculation in the calculation of the annual allowance limit. We will be studying further what is annual allowance limit, but at this point, keep just a single point in mind: the amount on which tax relief is not available will not be included in the annual allowance limit. So for calculating the annual allowance limit only, we will be seeing the amount on which tax relief is available. But in the case, will affect the value of pension fund for the lifetime allowances. For annual allowance, this excess on which tax relief is not available, not available students, this will not take into count for the annual allowance limit, but this 20 for calculating the lifetime allowance it will be taken. So the contribution on which tax relief is not available, students, for annual allowance limit and lifetime allowance, the excess amount on which no tax relief available, the excess amount in case of annual allowance will not consider this. The excess amount will not consider in calculating the annual allowance limit, will be covering further. And the case of lifetime allowance, the excess will be counted. This will be covering further more in detail, but just keep a point in mind. The contribution on which tax relief is not available will not affect the annual allowance limit, but it will affect the lifetime allowance limit. Now we will be seeing the method of obtaining tax relief for pension contribution, students. First we calculated the tax relief amount. What is the maximum pension contribution amount on which tax relief will be available? Maximum amount of pension contribution on which tax relief will be available. We'll calculate that first amount. Now we'll be seeing on this calculated amount how we will be earning the benefit or how we will be obtaining the tax relief. And we have seen that both the cases have different rules. Personal pension schemes have different rule, occupational pension schemes have different rule. Personal pension scheme, students. The method of obtaining tax relief for contributions into a personal pension scheme is the same whether they are made by an employee, self-employed individuals, or an individual who is not working. That is, who can set up a personal pension scheme? Employee, self-employed, or a person who is not earning. Now relief is given in the following manner. So students, I will be saying one word, this relief will be covered full. The pension scheme will be covered, personal pension. Do you remember in a chapter number 2, students, we had calculated the relief for gift aid donation. Gift aid donations. The same tax relief applies in the personal pension scheme. So the personal pension scheme and gift aid donation are same, student. Personal pension schemes and gift aid donations are same. The relief which was provided for gift aid donation is same replicable to personal pension scheme. Now we'll be taking a detail. We'll be seeing in detail only, students. But if students who remember the gift aid donation will be having a good idea, and they will be able to easily get this topic. Basic rate relief. We have two types of relief: basic rate relief, higher and additional rate tax relief. Basic rate relief. Basic rate tax relief is automatically given by deduction at source when contributions are paid. As an individual makes contributions, net of basic rate of income tax, that is 20%. So 80% will be paid by individual and 20% will be paid by HMRC, students, same as the gifted donation. Contributions into a personal pension schemes benefit from basic tax relief, even if the taxpayer is paying tax at the starting rate, higher rate, or not paying tax at all. So the basic rate tax relief will be available for an individual who is paying the tax at basic rate or at higher or additional rate, or the person who is not paying the tax. If a person is not paying the tax, either if he is paying the tax at basic rate or either he is paying the tax at additional or higher rate, this basic rate relief will be available for a person who contributes the money. HMRC pays the 20% tax relief to the personal pension scheme. I hope the basic rate tax relief is clear, student. First will be calculate the maximum amount of pension contribution on which the tax relief is available. Now on that amount, how we will be claiming the tax relief we are seeing, and the method for claiming the tax relief for both personal pension scheme and occupational pension is different. In case of personal pension scheme, it is same as the gifted donation, same everything. Basic rate 80% will be paying, 20% HMRC will be paying. Now Coming to the higher end additional rate tax relief. Relief is obtained in two parts, students. The first one is basic rate relief will also be available. As we have seen here, students, the basic rate relief will be available for individual paying tax at starting rate, higher or additional rate, or not paying tax. So higher and additional rate tax relief, it will be provided in two types. That is, the first part is basic rate relief will be provided. Further, the bands will be increased, same as the gifted donation, students. Gifted donation will be increasing our basic rate limit band and higher rate band limit. Further, higher and additional rate relief is given by extending the basic and higher rate tax band, that is 37,000 plus the amount 125 140 plus the amount by the gross amount of pension contribution paid in the tax year. As for gifted donation, seen chapter number 2, as we have seen in the chapter number 2, the gifted donation. This means that an amount of income equal to gross pension contribution is removed from the charge to the higher rate tax and is taxed at the basic rate tax. If the band get increased, student, whatever the income was taxed at 40% will be taxed at 20% only, and if it was taxed at 45% will be taxed at 40%. So this line means this. This means that an amount of income equal to the gross pension contribution is removed from the charge to higher rate tax band and it will be taxed at the basic rate instead, and the same amount is removed from the charge to additional rate and it will be taxed at higher rate instead. I hope this point is also clear, student. For example, if an individual pays a contribution of 8,000, that is net, he will be paying only 80%. So gross will be, students, 8,000 into 100 divided by 80. So this will be 10,000. So this 10,000 will increase the band. The individual's higher rate and additional rate thresholds are extended to 47,700 and 135, 140. I hope this is clear, students. So in case of personal pension schemes, tax relief is available by basic rate tax relief and additional or higher rate tax relief. So the personal pension scheme, the tax relief is available in the same manner as the gifted donation, but first we will be calculating the maximum amount of pension contribution on which tax relief is available. Then we will be using this amount for the tax relief purpose. This amount will be used to increase the band also, and this amount will be paying only 80% and 20% will be paid by the HMRC. So let's do a question, student, that we have a good understanding of this topic. Personal pension scheme. So the first step was we need to calculate the maximum amount of pension contribution on which tax relief is available, and then we'll be calculating the tax relief as per the rules for the personal pension schemes. The following individuals made gross pension contribution into a pension scheme, personal pension scheme, in a tax year 23-24. So the individuals are A, B, C, D, E and F. So this is the gross amount and this is the trading profit. Trading profit means relevant earning. Will be using for the maximum amount of pension contribution for the tax relief on which tax relief is available. There are no other source of income for all these individuals. Explain how tax relief for the pension contribution will be given in the tax year. So we'll be calculating the tax relief for each individual and calculate the income tax liability for D, E and F. So these three individuals we need to calculate the income tax liability. Chapter number 2. I hope you have a good idea of the rules, students, and you are doing a regular revision. For ignore the annual allowance will be seen later, so we need to ignore here. So let's start with this question, students. So I hope the question will be visible. If not, please do copy the data, students. So for A, we need to calculate the tax relief amount. So first, students, we'll be calculating the amount, the maximum amount on which tax relief is available, students. So tax tax relief will be lower of 1 and 2. One was total gross pension contribution paid, maximum annual amount. So this is the maximum annual amount on which the tax relief will be available, and further we'll be calculating the relief. So maximum annual amount is higher of two things: 3,600, 100% of relevant earning, students. So in case of A, for A employee, for A individual, it will be 5,000. Here it is given, students, and 0 or higher, that is 100% of relevant earning. Relevant earning is 0, and but we have a basic amount of 3,600. So the tax relief maximum amount of pension contribution on which tax relief is available is students lower of, so lower is 3,600, so it will be 3,600. I hope this is clear. Now we'll be seeing the tax relief amount. So as we have seen, the tax relief in case of personal pension contribution, it will be 80% will be paid by the individual, 20% paid by HMRC, and it will increase our bench if a person is higher or additional rate taxpayer. So tax relief will be, so this is the maximum amount on which tax relief. So 3,600 into 20%, this is the relief. So 20% it will be, students, 720. So this will be paid by HMRC. So A will need to be paid 3,600 into 80%, that is 2,408. It will be, students, here. So here the pension contribution. So the relief will be available on this amount, students, and the pension contribution the individual will be doing is, that is 20%, 80%, that is 3,600 into 80%, that is 2,880, plus the amount on which the relief was not available, as he is contributing, no, he is contributing 5,000. So the employee will be paying, the A will be paying 2,280 plus the excess amount, students, 3,600 minus 5,000 plus 4,400, this will be 4,280, because he is contributing 5,000, but the individual needs to only contribute 4,280, or directly you can do 5,000 minus the relief. Relief is 720, students, 720, this will be 4,280. I hope this is clear how the relief is available, students. First we'll be calculating the maximum amount of pension contribution on which tax relief is available, and so this is the tax relief amount. So 20% will be paid by HMRC. So the individual only needs to contribute 4,280. So now for B, we'll be doing for B. So maximum amount of pensions contribution on which tax relief is available is lower of two things, students, 1 and 2. Total gross pension contribution paid, maximum annual amount. It is, in case of B, it is, students, see here, 5,000 is the pension contribution, and this will be higher of 3,600 or 100% relevant earning. Relevant earning क्या है? Relevant earning is 20,000, students. So higher of these two are 20,000. 20,000. So on the whole contribution, the tax relief will be available. So tax relief will be available on 5,000, students. Now the amount of tax relief, this will be 20% of 5,000 will be paid by HMRC, that is 1,000. So the individual B need to contribute 5,000 minus 1,000. B only need to contribute, students, 4,000. I hope this is clear. Now moving to the next individual for C. So C, maximum amount of pension contribution on which tax relief is available. Lower of 1 and 2 total gross pension contribution paid, maximum annual amount. Higher of two things, 3,600 or 100% of relevant earning. Here the contribution for C is 25,000 and relevant earning is only 20,000 students. So this is 25,000, this is 20,000. So higher of these two amount is 20,000 students. So tax relief, the maximum amount on which tax relief is available is lower of these two, it is 20,000 students. So now the tax relief is student 20,000 into 20 percentage, that is 4,000. So the individual needs to contribute 25,000 minus 4,000, 21,000. So C will be contributing 21,000 into the pension scheme. I hope this is clear. Now students, do remember in a chapter number 2 when we were doing the tapering of the personal allowance, means we were reducing our personal allowance if our ANI exceeds 100,000 pounds, and we used to calculate the ANI as net income. ANI used to be, students, net income minus gross amount of gift aid donation and gross amount of personal pension contribution, students, personal pension. So whatever is the gross contribution to personal pension scheme, we will be reducing it. So I hope this is clear here. Do not confuse with the tax relief amount here. This is the whatever you have paid, gross amount, whatever gross amount you have paid. I hope this is clear. The personal pension will be used there also. I hope this is clear, students. This point we have already done. I am only giving a revision of the ANI concept, link between the chapter 2 and chapter number 6. I hope it is clear. Now we will be moving to D, students. So for D, for D students, the pension contribution gross amount is 40,000 and the relevant earning 95,000. We need to calculate the income tax liability for D, E and F, students. So maximum on which tax relief is available is, students, lower of 1 and 2. So first one, this total pension contribution 40,000, relevant earning or maximum annual amount, higher of 3,600 or 95,000, higher is 95,000, so 95,000. So lower from 1 and 2 is 40,000. So tax relief is available on 40,000, students. I hope this is clear. Now we will be calculating the tax relief. How we will be obtaining the tax relief? So as he is a higher rate taxpayer, students, because the earning is more than 95,000, the earning is 95,000, it is more than the band of 37,700. So D will be a higher rate taxpayer. So the tax relief will be provided in two parts: basic rate relief, see here, students, basic relief, and the additional higher rate relief by extending our bands. So basic relief, so 40,000, into 20%, 8,000, this will be paid by the HMRC, and individual will be paying, students, 32,000. Now we need to calculate the income tax liability, and this is the first part. Second part, how will be getting the benefit? Will increase our bands, 37,700 plus what is the amount of tax relief? Maximum 40,000, students. We need to take this amount, not the gross pension contribution. Gross pension contribution, this is only the amount on which relief is available. So this will be adding 121540 plus 40,000. So this will be, students, 77,700, and 165 165 140. I hope this is it. Now we'll calculate the income tax liability. Non-saving, saving, dividend, total. Trading profits come under the head of non-saving 95,000. So our total will be 95,000 students. No saving, no dividend income. So our total income will be students 95,000. And any relief is available? No relief. This format we have already learned in the chapter number 2, students. So this will give rise to our net income. Net income will be 95,000 students. Because there is no relief, so total income and net income will be the same. Now less PA. For PA we need to see whether it gets tapered or not, whether the PA will reduce or not. It will not reduce as the ANI. Now ANI will be, students, net income minus gross amount of contribution 95,000 minus gifted donation, no gifted donation, and the personal contribution is 40,000. Here will not be using the tax relief amount, students. This amount will not, but the total gross pension contribution, you need to see that. I hope this is clear. In some case it will be different. We'll be solving that case also in further. I hope this is clear. So it will be less than 100,000 pound. So it will be 55, students. This is less than 100,000 pound. So full PA will be available 12750. So this will be, students, 82,430. 12570. It will be, students, 82,430. On this we need to calculate our income tax liability, students. On this we need to calculate our income tax liability, and as D is an higher rate taxpayer, so the relief will be available in two parts: basic rate relief and the, students, basic rate relief will be available, plus bands also will increase. So income tax liability will be, as we have increased the band, students, here. So till 77,700 it will be taxed at 20%, that is a non-saving income, into 20%, and excess 82,430 minus 77,700 into 40%. 77,700 into 20%, 15,540, and this will give rise to an income tax liability of 1,892. So our total income tax liability will be, students, 17,432. I hope this is clear. By this you will have a better understanding. First we will be calculating the maximum on which the tax relief is available, lower of this, and that amount will be calculating how the tax relief will be available as basic relief in case of personal pension contribution, and if the individual is higher or additional rate tax, will increase the band amount by the gross amount of contribution, that is the tax relief. This is only the amount of tax relief, this only will increase. If our pension contribution was 45,000 but the relief is only 40,000, so 40,000 only will be increasing our band, not by 45,000. Now coming to the next case, students. Now we will be doing for E. So E has 60,000 pension contribution and trading profit of 25,000. 60,000 of for E. Pension contribution gross amount is, students, 60,000 pounds. Trading profit is 25,000. Maximum amount of pension contribution on which tax relief is available is lower of 1 and 2. One is total gross pension contribution paid 60,000, maximum annual amount higher of two things, 3,600 or 100% relevant earning. So the relevant earning, student, is 25,000. So the higher is 25,000. So the maximum amount of pension contribution on which tax relief is available is lower, that is higher of 1 and 2. This and this amount, this will give rise to 25,000. So it is less than the contribution. So now tax relief will be available, student, as basic rate tax relief 20% on 25,000 into 20% will be paid by HMRC. So it will be, students, 5,000. So the pension, the E will pay into the pension scheme 60,000 minus 5,000. So 55,000 E will pay into the pension scheme. Now we need to calculate the income tax liability, students. Non-saving, savings and dividend income and total trading income comes under the head of non-saving 25,000. I hope this is clear. No saving, no dividend income. So our total income will be, students, our total income will be 25,000. Now less any relief. Net income same as the total income, no relief is available, so less PA. PA will be available full because, student, ANI is not more than, ANI will be 25,000 minus 60,000 because the gross pension contribution is 60,000. Do not confuse and take this amount. I hope this is clear. Do not confuse and take this amount, students. I hope this is clear. 60,000. This will be the gross pension contribution in the case of ANI. So the taxable income will be, students, in case for E 12,430, 12,430, and this is in the basic rate limit, so will be paid at 20%. This will be, students, 2486. I hope this is clear. Income tax liability. If we were higher rate taxpayer, in this case our income tax liability will be increased by, our income tax band would increase by, students, 37,700 plus 25,000 plus 25,000, not 60,000. I hope this is clear, because this is only the amount on which tax relief is available. How we are claiming the tax relief? By increasing the tax band. Now coming to the last individual, F. So in case of F, pension contribution gross amount is, students, 30,000, but the trading profit is 195,000, students. So maximum amount of pension contribution on which tax relief is available is lower of 1 and 2. 30,000 pension contribution, maximum annual amount, higher of 3,600 or 1,95,000. So this is this higher. So lower of this is, students, 30,000. So tax relief will be 30,000 into 20%. This 20% will be paid by HMRC, students. This will be 6,000. So individual pay into the pension scheme, 30,000 minus 6,000, 24,000. Now as he is a higher rate taxpayer, additional rate taxpayer, will be getting the further relief by increasing our band. Our band will increase by 37,700 plus, will be seeing this amount lower of the tax relief amount, 30,000, not this gross pension contribution. I hope this is clear, students. Now so this will be, students, 60,000. This will be 155, 140. Now we need to calculate the income tax liability, students. Non-saving, savings, dividend, total trading income under the head of non-saving, 1,95,000. No savings, no dividend income. Total income, non-saving, it is 1,95,000, means 195,000. Sorry students, I am saying in Indian currency, Indian words, rupees. It is 195,000, 195,000 less relief, net income will be same as 195,000. Now coming to the personal allowance. Now we need to see personal allowance will get reduced or not. So we'll calculate the ANI. ANI will be students net income. Net income students is 195 less gross amount of gift aid donation, gross amount of personal pension contribution 0, and it will be here 30,000. Here when we are reducing from ANI, we need to see the total gross amount, not the tax relief amount students. I hope this is clear. So this will be students 195 minus 30, 165,000. As this is greater than 125,140, so PA will be 0. PA will be 0. So taxable income will be students 195. Now we need to calculate the income tax liability. Income tax liability. So till as we have increased our band students, see here, we have increased our bands. So up to 67,700, 20%, from 67,701 to 155, 140, 40%, and above 155, 140, 45%. So 67,700 into 20%, 67,701 to 155, 140, 40%, and above 155, 140, 45%. So this will be students 13,540, and this will be, the difference will be students 87,440 into 40%, it will be 34,976, and the additional will be 39,860 into 45%, it will be students 17,937. So this will be total of 66,453 pounds. I hope this is clear students. By solving these questions, the question number 2, we had a good idea students, we had a good idea of the maximum amount on which the tax relief is available, then the method of obtaining the tax relief, and in the case of ANI we will be using the gross pension contribution. But when increasing our band, we are increasing our band, we'll see the tax relief on which the maximum on which tax relief is available. If our contribution is 45,000 but the tax relief is only 40,000, so the band will increase by 40,000. But in case of gifted donation, it was gross amount of the gifted donation, but here it will be limited to the value. I hope this is clear students. Excuse me, please do try this question yourself again students, so that you have a better understanding. I hope the formula for calculating the maximum on which tax relief is available is clear, and the method of obtaining the tax relief for pension contribution is done. Now we'll be seeing the tax relief obtaining under the occupational pension scheme students. So personal pension scheme is clear, I hope. Now moving to the occupational pension scheme. So occupational pension scheme will be paid by employed person. The contribution will be made either by the employee or employer. Where employees make pension contribution into a occupational pension schemes, payment are made gross and tax relief is given at source by the employer through the payee system as an allowable deduction against employment income. Do remember the format of employment income, students. We had seen less allowable deduction, and that under that we had seen contribution into the pension schemes. Contribution into the pension schemes. Do you remember, students? We had seen this in the employment income. We had seen the format. We had seen the total income less the allowable deduction, and under the allowable deduction we had seen contribution to the made by a employee to his occupational pension scheme. Occupational pension scheme. So this will be an allowable deduction. Tax relief is given at basic, higher and additional rate of tax depending on the individual's level of income. So whatever the pension income, whatever the amount an employee contributes, that amount will reduce its employment income. So the relief will be available either if it is a basic rate, then basic rate relief, either if it is a higher rate or additional rate. If his income was employment income, only employment, an individual has an employment income of 100,000. If they contribute, students, 50,000 to the pension scheme, occupational pension, so the relief will be available at higher rate. So this means this. I hope it is clear. This is general theory and it is very easy, students. The employer will deduct the pension contribution from the individual's earned income before calculating income tax under the pay system. And we had seen the employment income earned will be taxed under the pay, means as we earn we will be paying the tax to the HMRC. So when our employer calculates the tax on the employment income, he will reduce the employment income by the amount of the pension scheme, the amount paid into the pension scheme. Tax relief is therefore automatically given at source at the employer's highest rate of tax. If they pay at additional rate, the relief will be at that, because if it was not reduced, the employer would be paying the tax at higher, if not at low, additional or the higher or the basic rate. I hope this is clear, students. Contribution paid by an employer into the pension schemes. As we have seen in the occupational pension scheme, employee will pay and employer will also pay. For the case of employee, it will be an allowable deduction from its employment income. Now we will be seeing the employer. Tax contribution paid by an employer into a pension scheme. Tax deductible in calculating the employer's taxable trading profit, provided the contributions are paid for the purpose of the trade. So the contributions which are paid by the employer, it will be reduced from the taxable trading profit. This will be covering in our next chapter. So let's take an example of a company. This is a company and I am employed by the company. So I am investing money into the occupational pension scheme. So if I am paying, it will be an allowable deduction, and employer pays into my pension scheme, so this will be an exempt, students. It will be exempt under the employment income head. We have studied contribution made by the employer for the employee's pension scheme will be exempt. Now, but the company paying this pension amount or the pension contribution, company can reduce from its taxable profit from the trading profit, as will be calculating the tax on the profits. From that profit, the company can reduce the pension amount. I hope this is clear, students. So whatever the employer pays into the pension scheme for the employee, the amount which the employer means the company, so the company can reduce from its trading income that amount, so that the tax will be calculated on a lower amount for the company. An exempt employment benefit for the employee, so it will be an exempt For employee, it will be an exempt benefit, students, as we have covered in our employment income chapter. Now, moving to the last point, added to the pension contributions paid by the employee on which tax relief is given to determine whether the annual allowance has been exceeded. So, this point, when we'll be seeing our annual allowance, it will be clear, students. So when we are calculating the annual allowance, the limit of annual allowance, the pension contribution which is made by the employer will also take into consideration when we see the annual allowance limit. We'll be covering in the next slide only that. We'll be seeing that more in detail. So only remember, when we calculate the annual allowance limit, we'll be reducing this amount. We'll use this amount to reduce the annual allowance. And in our first slide, in few previous slide, we had seen contribution which does not attract relief, students, will not affect the annual allowance limit but will affect the lifetime allowance limit. I hope it is clear. So for employer, this by reading this, we will have a good idea of the point number 1, students. The deduction against the employer's trading profit for pension contribution is given in the accounting period, so in which the contribution is actually paid. The accounting treatment is not followed in the taxation because the taxation rules are different from the accounting rules. So add back any amount charged in the profit or loss. If the company pays the company pays the pension amount, then they need to add that amount, deduct any amount paid in the accounting period. I hope it is clear. This, let's take an example, students. Example, company X and Y is an employee. If Y pays contribution into the occupational pension scheme, it will be allowable deduction. If company X pays, it will be, for employee, it will be exempt benefit. For employee, it will be exempt benefit. But now coming to the case of company. Each year company will be paying. I hope this is clear. And this amount the company will reduce from its profit when calculating the accounting profits. Accounting profits are different from the taxable profit, students. Do not confuse it. So from the profit they'll reduce as an expense, whether they pay or not pay. Now every year I need to pay. I am not paying still, but I'll reduce from my profit. But when coming to the taxable profit, students, taxable profits, the company needs to add back the profit. The company needs to add back the amount they have paid back to the profit and deduct the amount paid in the accounting period. I hope this is clear. Now for example, we need to pay 1000 for the employee's contribution, but we have only paid 500, students. So in our accounting books, we'll be showing profits less the expense of 1000. I hope this. But when coming to the taxable profit for the profit you need to add back 100 again, because this will give you profit. This profit figure will be this plus 1000. From this you will be reducing 500 because you only paid 500. I hope this is clear. We'll be covering this topic. We'll be covering in the next chapter. You will be having a good understanding. So just keep a understanding of this topic. Now we'll be doing the question, students. Now students, here we will not be calculating the tax relief amount because we are already paying from the employment income. So the employment income will be a relevant earning. I hope this is clear. Now let's do the question number 3 so that we have a good understanding of this topic. Z is employed by Y. Z is employed by Y Limited. So Z is employer and Y is employer, and Z is employee. Earning a salary of 80,000, he is a member of the company's occupational pension scheme. X pays 3% and Y pays 5%. So X pays 3% and his employer also pays, students, 5% of his salary into the scheme each year. He has no other income. Calculate X income tax liability for the tax year 23-24, showing how tax relief is obtained for his pension contribution. So for X, we need to calculate the income tax liability. So non-saving, saving and dividend, and this will be total. So he is an employed. So employment income less, how will be calculating the employment income, students? Employment income, note number 1, salary, no other income. Salary is the student, the salary is 80,000 pounds, less other benefits, no, less allowable deductions. Here it will be contribution to occupational pension scheme, that is 3%. 80,000 pounds into 3%, this will be, students, 2,400. So our employment income will be, students, 77,600. And students, here we had a benefit of 8,000 into 80,000 into 5% our employer pays. This will be 4,000, but this will be, students, exempt. You need to write it is an exempt. It is exempt. It is exempt, students. It will be exempt. So will not be showing here. Only you need to write a note. You need to write 0. Here 0, exempt. It will be exempt. So the employment income is, students, 77,600. I hope this is clear. And the contribution which is paid by 5% by the employer will be exempt under the employment income head. No saving, no dividend income, total income, no relief, net income, less PA, 77,600, students. No relief, so net income and total income will be same. PA 12570, as it will not exceed. I hope it is clear, students. This will not exceed. So PA will be available full. Taxable income will be, students, here 77,600 minus 12570, 65,030. I hope this is clear, student. 65,030. So on this amount we need to calculate the income tax liability. Income tax liability will be 37,700. No band will increase because it is an occupational pension scheme. 7540, and excess of 65,030 minus 37,700. The excess will be 27,330 into 40%, 10,932. So our total income tax liability will be, students, 18,472. I hope this is clear. First we'll calculate the maximum amount on which tax relief is available. I hope it is clear. Then we'll be seeing the method of obtaining the tax relief on that amount. In the personal pension scheme, we have seen the relief of 20% and extending our band rates. In coming to the case of occupational pension scheme, the amount will be reduced from the income tax under the employment income, as it will be an allowable expenses. If employer pays into this scheme, it will be an exempt benefit for us. It will be an exempt benefit for us. Now coming, students, as we have already seen the maximum amount on which tax relief is available, then we have seen the method of obtaining tax relief under the pension scheme and the occupational pension scheme and personal pension scheme. I hope this is clear. Now we will be covering the point of annual allowances. See here, students, we have seen two areas where we covered the annual allowance. Here, the contribution which do not attract the tax relief will not affect the annual allowance limit, will not be considered under the annual allowance limit, but it will be considered under the lifetime allowance. I hope we have taken the example of 50,000, 30,000. So this is the maximum tax relief available amount. So this amount will reduce the annual allowance limit, but the excess 20,000 will not reduce. So now we'll be covering this point also. And students, here also we had seen other point, annual allowance. Whatever the contribution the employer or the employee does will reduce the annual allowance. We'll cover what does the term annual allowance means. Now coming to the most important topic of annual allowances. What does the term annual allowance means? There is no limit on the amount that may be paid into the pension scheme by an individual. So there is no limit, students. I can pay X amount in the pension scheme, but the relief will be available on the maximum amount. We need to calculate that maximum amount. Then we'll be calculating the tax relief. But there is no limit on the amount that may be paid into the pension scheme by individuals, their employer, or any third party. So individual or employer or third party. However, as we have seen, tax relief for pension contribution made by an individual is restricted to the maximum annual amount, students. We have seen the maximum annual amount on which the tax relief is available. I hope this is also clear. First point is clear and second point is clear, students. I hope these 2 points are clear. The tax relief is available up to a maximum annual amount. Maximum annual amount is higher of two things, 3,600 or 100% of relevant earning. And for calculating the tax relief amount, we used to take lower of total gross pension contribution, maximum annual amount, whichever is lower, 1 and 2. And we know that there is no limit in making the contribution to the pension scheme, but the tax relief is available up to a maximum annual amount. In addition, if the total of all contributions by the individual, their employer, and the third party on which tax relief is available, has been obtained exceeds the annual allowance, a tax charge is levied on the individual. So I'll just say a example, student. What does the word annual allowance means? So let's take an example. First, any amount can be contributed. I hope this is clear. Then we'll be calculating tax relief, maximum amount on which tax relief is available. So let's take an example of this. For an individual, the relevant earning is 100,000. Students, 1 minute. Example. So the relevant earning is 100,000, students. So if an individual invests this whole amount, he will be earning tax relief. But HMRC says that there is a limit. There is a limit to invest of. There is a limit of an amount you can invest into the pension scheme, that is 40,000. So the 40,000 is an ceiling limit, students. This is a ceiling limit. Means if you go above this amount, you will be having a charge, that is annual allowance charge will be covering. So what does the term annual allowance means? The maximum annual amount on which tax relief will be available can be more, students. It can be 1 million also. It can be 1 million, students. But if 1 million is invested by a person, he can claim so much tax relief. But HMRC has given an amount till which the relief is available. So 40,000 is the ceiling limit. So if an individual can only claim 40,000 relief, above this, whatever relief he has claimed, whatever amount he has invested on this will be taking a charge, tax charge, that is annual allowance charge will be covering now. We'll be doing an example so this topic gets clear, students. I hope the annual allowance is the ceiling limit, students. The annual allowance is the ceiling limit. Annual allowance is the ceiling limit. Annual allowance is the ceiling limit. So the relief will be available. The tax relief of 20%, everything will be available, but a further charge will also be levied on the individual. In addition, if total of all contribution by the individual, the employer, and third party on which tax relief has been obtained, so tax relief has already been obtained, exceeds the annual allowance, we have already claimed the tax relief, whatever amount it is. But if the amount which we have contributed exceeds the annual allowance, a tax charge is levied on the individual. The annual allowance limit for the tax year is 40,000. This 40,000 keeps on changing and each finance act, and this 40,000 will be provided in the examination. but this can be increased by bringing forward any unused annual allowance from the previous 3 tax years. So the current tax year annual allowance limit is 40,000. You have already claimed the tax relief, students. You have already claimed the tax relief. Then HMRC says there is a ceiling limit of 40,000. If above this amount any relief is claimed, on that you will be paying an annual allowance charge. We'll be seeing how we'll be calculating that charge also. So this limit will be provided in the tax rate sheet, and this limit of 40,000 can be increased by bringing forward any unused annual allowance from the previous 3 tax year. Previous 3 tax year, if you had any unused annual allowance, you can carry forward. But an unused annual allowance can only be carried forward if the individual was a member of the pension scheme for that tax year, otherwise it is lost. So if previous 3 tax year you had a annual allowance amount, and if the individual was a member of pension scheme, then only you can carry forward. If the individual is not an member of the pension scheme, then he can carry forward, he can't carry forward. I hope this is clear, students. The annual allowance is the ceiling limit. If the pension contribution exceeds this amount, a further tax annual allowance charge will come into picture. Will be charging a tax on it for the amount which is invested above 40,000. But this 40,000 can also be increased by bringing forward unused annual allowance from previous 3 tax years. So from previous 3 taxes, if annual allowance limit is available, we'll bring forward to the current tax year. And one important point is that, students, the annual allowance which we are bringing from the previous 3 tax year, in that tax year the individual must be the member of the pension scheme. Individual was a member of the pension scheme, he must be the member. And now the annual allowance for the current year is used first, then the annual allowance for earlier years, starting with the earliest year in the FIFO basis. So students, let's take an example that the tax relief form is available on 100,000, but the annual allowances we can contribute only 40,000. So excess is 60,000. I hope this is clear. This is the maximum tax relief amount. I hope this is clear. But this is above the ceiling limit of 40,000. It is 60,000. This 60,000 will be charging annual allowance charge. We'll be seeing how we will calculate it. But when this 40,000 is there, now students, this can increase by bringing forward previous 3 taxes annual allowance. When you bring forward the previous 3 tax year allowance, this thousand will reduce this, no students. First it will reduce the 40,000, then the other unused annual allowance which has been brought forward, like for the year of, it is 23-24 our tax year. So 22-23, 21-22, 2021. So the unused annual allowance of 2021 will be used first, then 21-22, then 22-23. We'll be seeing a question so that we have a better understanding, students. I hope this is clear. Now we'll be doing a short question. Calculation of annual allowance. So annual allowance is the maximum limit on which this is a ceiling limit, students. Tax relief you will be claiming, but tax relief is only claimable to a limit. But if you claim the tax relief on the whole amount, if further the amount on which the tax relief is claimed, will be calculating the annual allowance charge. So first we'll be seeing how to calculate the annual allowance. SMN made gross pension contribution as follows. I hope this is clear, students. 2021, 21-22, 22-23, these are the pension contributions. S has been a member of the pension scheme since the tax year 2013 to 14. M joined the pension scheme in the tax year 21-22. Both have relevant earnings of 100,000 per annum. State the maximum gross contribution that S and M could make in the tax year 23-24 without incurring an annual allowance charge. As we have discussed, if the contribution of all these schemes paid by the persons exceed this, will be calculating on the excess amount annual allowance charge. Annual allowance charge. I hope this is clear. This point is clear. We are only dealing with this now, and how to calculate the annual allowance amount. So annual allowance in case of S. So current year 40,000 will be available, students. 40,000 pounds will be available, or previous three tax year. Previous three tax year are these three tax year. So the first one will be, no, it will not be available because 40,000 uses the limit. Second month 15,000. So 20, 21, 0, 21, 22, 15,000, because 40,000 minus 25,000 student it is, and he was already the member of the pension scheme. If he is a member, then only we can carry forward it. 22, 20, 17,000 minus 40,000, it will be, students, 23,000. So 22, 23. So this is, student, the total of 78,000. So if an individual contributes 78,000 into the pension scheme, then this is the gross amount, gross maximum gross contribution, so that there will be no annual allowance charge, student. There will be no annual allowance charge. I hope this is clear. I hope this is clear, students. This point is clear. I hope this is clear, student. How we'll be calculating the annual allowance. Now, students, I'll be taking an example here only. And now we need to solve for M also, no? We have already done for M, S and M. In case of M, current year it will be 40,000 because he is the member of the pension scheme. He became the member in 21, 22. So 21, 24. So 2021, it will not be available, students, because he was not the member. 21, 22, 15,000. So 40,000 minus 15,000, 25,000. And 22, 23, the contribution was only 6,000. So it will be 34,000, students. So this will be total of 99,000. So this is the maximum gross contribution which M can do, so that there is no annual allowance charge. I hope this is clear. If they invest more than this, there will be an annual allowance charge. I hope this is clear, students. Now, students, before moving to our next slide, this annual allowance, students, this is the maximum ceiling limit. If we make more than this, there will be annual allowance charge. Now, tax relief, we have claimed the tax relief. Now we have claimed the tax relief on certain amount, like 100,000, students. I hope this is, we have already claimed it. But this exceeds the annual allowance limit. This is the ceiling limit, students. And this limit will include what all contributions, students? So this will include gross contribution by employer, employee, or any third party on which tax relief is claimed. On which tax relief is claimed. The annual allowance, student, when calculating the annual allowance, when this annual allowance of 40,000 plus any previous 3 years, this is the annual allowance which we can, 40,000 plus previous 3 tax years. This is the annual allowance limit. This annual allowance limit will be reduced by what all? Pensions contribution by individual, their employer, or any other party on which the tax relief is claimed, on which the tax relief has been obtained. So tax relief means, so in case of, so the annual allowance limit will be reduced by gross pension contribution by the employer, employee. So in case of occupational pension scheme, on this tax relief, because it is relevant earning, employment income is relevant earning, so this will be eligible for tax relief. Now when coming to personal pension contribution, on which tax relief is available, on which tax, not the gross amount you paid, the amount of tax relief, so that amount will be taking tax relief amount. So if our contribution, student, was only 40,000, but the relevant earning was only 20,000, so this 20,000 is the tax relief amount, but on the 20,000 relief will not be available, only on 20,000 it will be available. So this annual allowance will be reduced only by 20,000 on which the tax relief is claimed, on which tax relief is claimed. Please do keep in mind, students, Here also we have done. See here. See here. Such contribution do not contribute towards the annual allowance limit. So the annual allowance limit will not be reduced by the amount which is not having tax relief. Only 20,000 will be having in our case. So this will reduce the annual allowance limit. This will not reduce, because on this amount we are not getting the relief. We are not attracting any relief. I hope this is clear. So this annual allowance is an limit. If above this amount, any amount is invested in the pension scheme, there will be students annual allowance charge. Now we'll see how to calculate the annual allowance charge. Calculation of annual allowance charge, where the total of all contribution on which relief has been obtained. So on which relief has been obtained, like relief has been obtained on the occupational pension scheme amount paid by the employee, employer, and these are the all the total contribution. When coming to personal pension scheme, by the employee or by his employer. I hope this is also clear, student. These are the total, all the contribution, but the tax relief will be available in a different way. Occupational pension scheme, employee it is an allowable deduction, employer is exempt, and personal pension scheme, employee pays, it will be treated as, students, it will be treated as, gifted donation, same as we have already done it, students. We have already covered it. And if any employer pays for the employee's contribution, it will be exempt. I hope this is clear. Now we'll be seeing the annual allowance charge. Annual allowance charge will be applicable when the annual allowance limit exceeds the amount which you have contributed exceeds 40,000, and this limit can also increase by carry forwarding the annual allowance limit of previous 3 tax year if the individual is the member of the pension scheme, where the total of all contribution on which relief has been obtained exceeds the annual allowance limit, including brought forward annual allowances. So all the total contribution means individual pays, his employer pays, or any third party on which tax relief has been obtained, so that amount will reduce the annual allowance limit. There is a charge on the excess. So let's assume, student, that all the total contribution amounts to 10,000 pounds and our 100,000 pounds, and our annual allowance is 40,000. So excess is 60,000. On this 60,000 we'll be calculating the annual allowance charge, and this 100,000 is, student, all the total contribution on which tax relief is available. Only tax relief amount we need to take. I hope this is clear. How we will be calculating the tax on the excess of 30,000. The tax charge is calculated as if the excess is the individual's top slice of income. What does the term top slice of income means? Taxed last after all source of income, including dividends, at non-saving rates. So this 60,000 will be taxed at the last after calculating the tax on dividend. This 60,000 will be considered, and this 60,000, on this 60,000 annual allowance charge will be charged at the non-saving rates. So for example, the dividend income falls under the additional rate. So last is your additional rate and the dividend income, so it is 45%. So for dividend it will be, students, less rate. So dividend it will be less rate, that is 39.35%. But now this 60,000 will be taxed at 45% as not saving rates. I hope it is clear. We'll be doing sums so that we have a good understanding. Only remember these 3 basic points and the annual allowance limit. The AA charge becomes part of the individual's total liability and is either paid through self-assessment system or in some case may be taken from the individual's pension funds. So the annual allowance charge will be added to the income tax liability of the individual, or it will be extracted from the pension funds. I hope this is clear. How will be calculating the annual allowance charge? The annual allowance will be reduced by the total contribution, and if excess amount is there, this excess will be taxed at the top slice. Top slice means at the end of all the income, it will be taxed at the end. At the end, so we'll be deciding at the end what will be the tax band and non-saving rates will apply. I hope this is clear, students. Now we'll be doing a question so that we have a good understanding. Calculation of annual allowances, students. Calculation of annual allowance charge. So this is a detailed question. We'll have a good idea. S has been self-employed interior designer for a number of years. He is a self-employed. In the tax year 23-24, she had trading income of students 105,000 and gross contribution into personal pension scheme is gross personal pension contribution is 90,000. S does not have any unused annual allowance brought forward. So there is no unused brought forward allowance. Previous three tax year we have already used in that tax year. Explain how tax relief will be obtained for pension contribution made by S and calculate her income tax liability for the tax year 23-24. So first we'll be seeing the tax relief amount, students. Maximum tax relief. So maximum amount of pension contribution on which tax relief is available. I hope this is clear, students. This is lower of 1 and 2. I hope this is clear. Total gross pension contribution paid, that is 90,000, students. This will include all the contributions. Second, maximum annual amount higher of 3,600 and the relevant earning. Relevant earning here is trading income. So this is the higher one, students. So it will be this. So the tax relief will be available on the maximum amount of lower of these two cases. It is 90,000. As this is a personal pension contribution, the relief will be available, student, at basic rate and higher rate. So the basic rate tax relief will be, students, the basic rate tax relief will be 90,000 into 20%. 18,000 will be paid by HMRC, students. I hope this is also clear. Now coming to the higher rate and additional rate relief. This will be done by increasing our tax band plus what is the tax relief amount? 90,000 maximum 125 140. I hope this is clear, students. Now we'll be calculating the income tax liability, students. Normal, the same way as we used to do, students, the normal way. Now we'll be calculating the non-saving income, students, saving incomes and dividend income. This will be total. So trading income will be 105, no saving income, no dividend income. So saving, dividend, nothing. So total income less relief will give net income. This we used to follow the same steps, students, previous also. So this net income will be 10. This will be 0 0. Net income is 105 500. I hope this is clear, students. Now less PA. Now we need to see whether our PA will get tapered or not. So ANI, net income less gross amount of gift aid donation, gross amount of personal pension contribution, net income is this amount. So pension contribution here is, students, the pension contribution here is 90,000. So 90,000. So our ANI will be, students, 15,000. As this is less than 100,000, so it will be, the PA will be available full 12570. So our taxable income will be, students, our taxable income will be 92,430. 92,430. The income tax liability, as our bands have been increased because it is a personal pension contribution, our band has increased from 37,700 plus 90,000, it will be 127,700 will be taxed at basic rate. So already this is within the basic rate limit. So 92,430 into 20%, student. This is clear. So it will be 18,486. So I hope, students, till here no doubts. Till here we have already covered in a previous question also. Now the new picture comes here, the annual allowance and the annual allowance charge. The new picture comes here, annual allowance and the annual allowance charge. So annual allowance means the maximum limit you can contribute into the pension scheme. So that is 40,000. But we have contributed 90,000, but that is also eligible for tax relief. So tax relief is available on 90,000. So annual allowance you need to reduce by gross amount of employers' contribution to personal pension scheme, students. Personal pension scheme. I hope this is clear. Employees' contribution to occupational pension scheme less gross amount of employer contribution to occupational pension scheme, employees' contribution to personal pension scheme, employer contribution to occupational pension scheme, personal pension scheme. So I hope this annual allowance will be, this limit of 40,000 will be increased if unused annual allowance limit is there of previous 3 tax year and the individual must be a member of the pension scheme. As in a question, there is no unused annual allowance brought. So this will be 40,000. This will be reduced by these, and this amount must be under the tax relief. It must not exceed the tax relief amount. So in this, for employee, it will be always, because students, why? As we are paying from the employment income is 100% of the relevant earning, so no issues. And in case of employer, it will be exempt, but this will be reduced. See, students, we have learned here under the occupational pension scheme, added to the pension contribution paid by the employer on which tax relief is given to determine whether the annual allowance has been exceeded. So the contribution which is done by the employer will also be reduced, will also reduce our annual allowance limit. And when coming to the contribution which do not attract the tax relief will not be included. Now in our case, the annual allowance, student, here is 40,000 only. This will be reduced by the contribution. So the contribution is 90,000 and this is also the tax relief. This amount is also attracting tax relief. So this will reduce. So the excess will be, students, so only 40,000 we can invest, but we have invested 90,000. So excess is 50,000. On this 50,000, annual allowance charge will be applicable. How will be calculated annual allowance charge? This will be treated as the top slice of income. Means after all the income have been taxed. So all the income here is 94,430. So it will be taxed after this. Excuse me, students. After this will be taxed at non-saving rates. Non-saving rates. So this will be, students, here we have already taxed it. So this 50,000 will be taxed as 35,270 will be taxed at 20%, that is 7,054, and the excess of 50,000 is 14,730 will be taxed at 40%. This will be, students, 5,892. So our income tax liability will be, students, 31,432. I hope this is clear. The annual allowance is the ceiling limit. If this ceiling limit exceeds, then we'll be calculating the annual allowance charge. Annual allowance charge, the excess amount will be taxed as the top slice of the income. Top slice of the income means after taxing all the income, that is, see here students, top slice of income including the dividend. Till dividend you have calculated the tax rate. After that we don't have any income. This excess amount will be calculated as the top slice and it will be charged at the non-saving rates. I hope it is clear by solving this question. So let's move to a further question so that we have a better understanding. M has been employed for many years. However, he only becomes a member of the pension scheme in 2021. In the tax year 23-24, M earned 100,000 employment income, that is salary, and made a gross contribution of 86,000 into the personal pension contribution in March of the last 3 years M. So these are the contribution which he has done in last 3 years, and the current tax year he has done the contribution of 86,000 and earned income of 100,000. Now we'll need to calculate the M's income tax liability. Now first we'll be calculating the tax relief. Maximum amount on which tax relief is available is, students, lower of 1 and 2. Contribution 86,000 total gross contribution, and second one is maximum annual amount higher of two things, 3,600 and relevant earning. UK relevant earning includes furnished holiday lettings, taxable trading profit and employment income. So it will be 100,000 here. So this will be included. So lower of means tax relief is available on the whole contribution amount, that is 86,000, as it is lower. So tax relief is available as he is a higher rate taxpayer. So we'll be getting the tax relief in two parts. Basic relief is 20% will be paid by the HMRC, that is 17,200, students. This will be paid by HMRC. M will pay into the pension scheme 86,000 minus 17,200. This will be 68,800 will be paid by this individual. I hope this is clear, students. Now we will be calculating the additional benefit will provide in the form of tax band. So 37,700 plus 86,000, 125, 140 basic band, higher band plus 86,000. So this will be, students, 37,700 plus 86,000, 123, 700, 125, 140 plus 86,000, 21140. Now we'll be calculating income tax liability, non-saving income, saving, dividend, total. So employment income. Here we are paying in the pension, personal pension contribution. It is not in the occupational. If it would be occupational, we would have reduced our employment income, but it is here personal pension, not the occupational pension scheme. So 105, 105,000, saving, dividend, total income will be the same, will be 105,000. I hope this is clear. Less relief, no relief is available, students. Net income will also be same. This will be, student, 0. Sorry, we don't have any income here, my mistake. 0, 0. Now we need to see our personal allowance, students. Now we need to see our personal allowance. Less PA. PA will be available full because ANI is less than, because net income less gross amount of gifted donation, gross amount of personal pension contribution. 105,000 minus 86,000 is the gross contribution we have done into the pension scheme. This will be, students, 19,000. This is not greater than 100,000. So full PA will be available. 12570. 12570. So our taxable income will be, students, our taxable income will be 87,430. 87,430. Now we need to calculate, students, the income tax liability. As it is within the basic rate limit, as our income bands have been exceeded. See here, students, it has been exceeded because of the personal pension contribution relief. It will be, students, 17,486. Now coming to the next area. See here, students, annual allowance. What is the maximum annual allowance we can contribute? We can contribute maximum 40,000. This limit will be increased if the unused previous year allowances. So he became a member in 2021. So this year it will be available 17 minus 40. It will be, so 23,000 will increase this limit of annual allowance limit. If anything excess of annual allowance is paid, annual allowance limit, it will be paid to annual allowance charge, students. So annual allowance limit will also be increased if we carry forward the previous 3 years unused annual allowance. So, and he must be a member. He became a member on 2021. So further years also he'll be a member. So in 21-22 it will not be available because 40,000 we have already used, students, and 40,000 we would have already used, students, and this 10,000 we also have used here. This 10,000 would have also been used. So less 10,000, because in the tax year of 21-22 the annual allowance will be 40,000. Above this will be taxed, but 21-22 will use the limit in 21-22. 2021 will be used in 21-22, because assume, students, in 21-22 it will be reduced by this year, because 40,000 this year and 10,000 of that year. So here no annual allowance charge in 21-22. 22-23 it will be 34,000. So 6,000 is available. So the annual allowance limit will be, students, 19. This plus this, it will be, students, 40,000 plus 19,000, 59,000 will bear. If an individual who contributes more than this amount, we will be total all the contribution, will there be an annual allowance charge, and this 86,000 is more, students. Here this 86,000 is more. So our annual allowance, so the 86,000 will first reduce from the 40,000, then following the carry forward annual allowance of the 3 years, that is 23 minus 10, it is 13,000 and 6,000. First we need to reduce the annual allowance of the current year, then previous year, following the FIFO basis. First in, first out. First year is 2021, then 22-23. So the students, the excess will be here. Here the excess will be 86,000 minus 40,000 minus 19,000. So 27,000 is the excess. On this will be calculating annual allowance charge, students. Annual allowance charge. And how will calculate the annual? This will be treated as the top slice. Top slice means after all the income head. So after all the income head, if we see, it will be in the after the non-saving, as no dividend income, so it will be treated as this. So it will be taxed at our limit, our band is, see here, students, our band is 123,700. So So this 27,000 will be taxed at the top slice into 20% because our band is, students, see here, our band is 123,700 and we have only used 87,000. So 123,700 minus 87,430. So still we are left with 36,000 of the basic rate limit. 36,270 basic rate band is available. So it will be taxed at this. So it will be 27,000 into this will be 20%, 5,400. This 5,400 will increase our income tax liability. So our income tax liability will be, students, 22,886. I hope by solving this question this topic is clear about the annual allowance and the annual allowance charge. Annual allowance is a limit 40,000. If we contribute more than 40,000, there will be annual allowance charge, but this 40,000 can be increased by previous 3 tax years unused annual allowance limit. I hope in a FIFO basis, first in first out. First, if in our case, students, see here students, we have seen already a case that the 50,000 was contribution, but only 40,000 was the annual allowance. We will use the annual allowance of 2021 because previous 3 tax years, and he only became the member in 2021, so he can only forward from 2021. So the 10,000 we had left off, 23,000 was left over the annual allowance, but 10,000 was used in the 21-22. In 22-23 will be left with 6,000 and the rest, that is 13,000. So this will be available. Increase the annual allowance limit. I hope this is also clear. Then this annual allowance will be whatever is the excess. How will be reducing? Now I am paid 86,000 is my the gross contribution. So first 40,000. Then we'll be using the further 3 tax years. Previous 3 tax years brought forward annual allowances in the order 21-22, 21-22, 22 and 23. I hope this is clear, students. Now moving to the last topic of this chapter, tapering of annual allowance, students. Reduction in annual allowance. As students, we have seen in our chapter number 2 that the personal allowance get reduced if our ANI exceeds 100,000. And if it is 125, 140, no PA is available. If it is between this, it will be reduced by the 50%. PA will be reduced. So that is our ANI minus the limit divided by 2. This amount will reduce the PA. So in a same case, we will be seeing the annual allowance also will get reduced, students. The annual allowance will also get reduced. The annual allowance also will get reduced. Restriction of annual allowance, higher income individuals. So annual allowance will reduce for individuals who are having higher incomes, Now the term higher income will be seen further. The annual allowance is gradually reduced for individuals with higher income. The restriction applies to individuals with a threshold income exceeding 200,000 pounds and adjusted income exceeding 240,000 pounds. However, the 200,000 threshold is not examinable in the tax examination. The restriction operates in a similar way to the reduction of the personal allowance for higher earners. The annual allowance is reduced by adjusted income minus 240 into 50%. If necessary, the reduced AAA is rounded up to the nearest pound. The reduced AAA will be rounded to the nearest pound. Although rounding up or rounding down is acceptable in the examination, the minimum annual allowance can be reduced as 4,000. So the annual allowance can be reduced till 4,000. Further we can't reduce this, students. This is same as the PA, students. In case of PA, we used to see the ANI. but in case of annual allowance, we'll be seeing the adjusted income. So annual adjusted net income was for the PA, but for annual allowance it is adjusted income. Now we'll be seeing how to calculate adjusted income, students. If our income threshold exceed 200,000 pounds, then we'll be tapering the annual allowance. We'll be seeing if our our adjusted income in case of annual allowance, in case of PA it was adjusted net income, students. It was adjusted net income. In case of annual allowance it is adjusted income. Now we'll be seeing how to calculate the adjusted income. If your income exceeds 2,000 pounds and you're doing the personal pension contribution, you must see whether your annual allowance get reduced, whether gets tapered or not. How? Same way, students, in PA we used to see if our income exceeds 100,000, we used to see whether the PA will get tapered by calculating the ANI. Same here also, if your income exceeds 200,000, you will be seeing whether the annual allowance will get reduced or not in the current tax year. How? By calculating the AI. By calculating the AI. So, I hope this is clear. The annual allowance is gradually reduced for individuals with higher income. The restriction applies to individuals with a threshold income exceeding 200,000 but adjusted income exceeds 240,000. We'll be seeing this same as PA, no issues. I hope it is clear. And the annual allowance will be reduced by adjusted income. There we used to use the ANI minus 1 lakh 100,000 pounds. Here it will be 240. The limit will be 240,000 into 50%. And the maximum annual allowance will be available 40,000. So in a case PA would be 0, but here annual allowance cannot be 0. It will be 4,000. It can't be 0. Now we will be seeing how to calculate it. The calculation of adjusted income is complicated in practice, but for tax purpose can be simplified as follow. In practical world it is very difficult to calculate the adjusted income, but for tax purpose it is very easy. So students, net income, will be considering the net income. Same in PA also, ANI calculate net income. Adjusted income. So adjusted income is calculated as net income from the income tax computation format. The net income, total net income from the total column. Plus we need to add here. In the case of ANI we used to reduce it, but in case of annual allowance under the adjusted income will add it. Plus individual employees occupational pension contribution, what the individual employee contributes into the pension contribution fund, plus employees contribution to any scheme for that individual. So adjusted income will be calculated, students, as net income plus employees contribution in the occupational pension scheme and employers contribution in both the scheme, occupation pension scheme, personal pension scheme. So this will give rise to adjusted income. I hope this is clear, students. I hope this is clear. I hope this is clear. Now we will be seeing how to calculate or how, by what amount the annual allowance will get reduced. So annual allowance will get reduced by ANI, not ANI, it is annual AI minus the C, students, adjusted income minus 240. The limit for ANI was 100,000, here it is 240. So if our AI is below 240, the annual allowance will not get tapered. If it is more than that, it will get tapered. I hope this is clear. Now, and how will be calculating the AI, students? AI will be net income plus individual's employee occupational pension scheme contribution and employee pays into the occupational pension scheme plus employee's contribution to any scheme. If adjusted income exceeds 240,000, the annual allowance for the tax year is reduced. That is, if AI is more than 240,000 pounds, it will get reduced. The annual allowance will get reduced. Where the annual allowance has been reduced for a higher income individual, it is the reduced annual allowance which is compared to the actual contribution in the tax year when determining if there is any unused annual allowance to carry forward. Means simple, where the annual allowance has been reduced for, annual allowance will be reduced, it is reduced annual allowance which is compared to the actual contribution in the tax year. So now we'll be using this amount, not the 40,000. We'll be using this amount plus previous 3 tax years brought forward. This 40,000 will be increased previous 3 tax years, and this 40,000 will be reduced if our AI adjusted income is more than 240,000. But why, what amount? 2 for AI minus 240 divided by 2, or AI minus 240 into 50% students. By this amount you will reduce your this 40,000 amount. We'll be solving questions so that you have a good understanding, students. When an individual's adjusted income is 312,000 or more, the annual allowance is reduced to 4,000. Is available only 4,000. So as we have seen, students, that if in case of personal allowance, we have seen that if our ANI is more than this, the PA will be 0. Here also, if the ANI is 312,000, then it will be 312,000 pounds, then it will be 4,000. Or if above, if your ANI, if your AI in case of annual allowance is more than this, 4,000 annual allowance will only be available. Now let's do a question so that we have a good understanding. The annual allowance is same as the personal allowance reduction, but there it was ANI, here it is AI. AI means adjusted income. How will we calculate adjusted income? Net income plus individual employees occupational pension contributions plus employees contribution to any scheme for that individual. I hope this is clear, students. If the adjusted income is exceeds 240,000, then annual allowance will be reduced, and that annual allowance will be used for further calculation for the annual allowance charge. And if the adjusted net income is 312,000 pounds, then or more, then the annual allowance will be available of 4,000. I hope this is clear. Now let's do questions so that we have a good understanding, students. Question: the following individuals have occupation pension schemes into which the following contributions are made during the tax year. For A, B and C, employees contribution and employees contribution, taxable employment income. They have no other source of income. Calculate the annual allowance for the tax year 23-24 for each individual, assuming they have no unused annual allowance brought forward. So there is no unused annual allowance brought forward. So we need to calculate the annual allowance for A students. The annual allowance will be available 40,000. This annual allowance will be tapered or will be reduced if ANI or AI. If AI students, please do remember, it is AI, not ANI, is more than 240,000 pounds. So we'll be seeing whether the AI exceeds or not. AI is net income. Net income means before PA, so it will be 200,000 plus employees contribution to pension scheme, employee occupational pension scheme contribution plus employer to both the schemes, but here only it is for occupational pension scheme. So 30,000 students plus 5,000, it is 235,000 pounds. So our AI is less than 240, so the full annual allowance will be available. Plus previous 3 years it is not available, no. So the annual allowance will be 40,000. If contribution exceeds above this, annual allowance will be charged in case of A. Now coming to B. So for B, annual allowance will be available 40,000 plus previous 3 tax year. No, it is not available. No unused annual allowance is available. So no previous 3 tax years. I hope this is clear, students. Now we need to see whether our annual allowance get tapered because our income is more than 200,000. So we need to calculate AI. In case of personal allowance, we used to see student the 1000 per year, 200,000. So AI is net income 310,000 plus employees contribution to occupation pension scheme, employees contribution to pension schemes. Now here it is 8,000 plus 2,000, 8,000 plus 2,000. So this will be students 320. Now as our ANI as our AI adjusted income is more than 240,000, our annual allowance will get reduced. Annual allowance will get reduced by using the formula of AI minus the limit divided by 2. So our AI is here 320,000 minus 240 students divided by 2. So this will be 320 minus 320 minus 240, 80,000 divided by 2, it will be 40,000. So our annual allowance will get full reduced, students. No annual allowance. No. There is a basic annual allowance, that is 4,000. The annual allowance can't reduce full zero. It can maximum reduce by 36,000. So the annual allowance will be 44,000 available for B. If you were good at understanding that as our ANI, or not ANI students, sorry, it is AI adjusted income is more than 312, so 4,000 will directly available. We need not do this calculation, but for your understanding sake I have done this calculation. Now further moving to C. So for C, as our income is 200,000, we need to see whether our annual allowance will get reduced or not. So the contribution by employee is 12,000 and 20,000. So now 250 as it exceeds, so annual allowance will be available for C is 4,000, 40,000. As our income is more than 200,000, we need to see whether our annual allowance will get reduced or not. So we need to calculate the AI, students. AI is net income. Net income will be same only, students, plus employee plus employer contribution. Occupation pension scheme, both these schemes. Now net income will be 205,000 plus 12,000, and here it will be 20,000, students. So it will be total of 205 plus 12 plus 20 to 250, sorry students, it is 250 here. So this will be 282,000 pounds. As our AI, sorry students, as our AI is above 240, so our annual allowance will get tapered by what amount? AI minus limit is 240 divided by 2. So our AI is 282,000 minus 240,000 divided by 2. Excuse me. So this will be, students, 82 minus 40, 42,000 divided by 2. This will be, students, 21,000. So our personal allowance will get reduced by 21,000. So the personal, not the personal allowance, students, sorry, annual allowance will be 19,000. It will be 19,000. I hope, students, this point is also clear. The annual allowance reduction. Now we have covered all the topics, students. We have covered all the topics. Now We have covered all the topics relating to the pension scheme. Please do solve many questions so that you have a good understanding of these topics. And students, we have seen that the annual allowance is 40,000. It will be reduced if our income exceeds 200,000, and we need to see whether our EI is more than 240,000. If it is more than 312,000, then 4,000 annual allowance will be surely available, and annual allowance can be carried forward on previous three tax year if he is the member. And the annual allowance, if the contribution is more than the annual allowance limit, then it will be taxed as the top slice of the income. And this annual allowance we will reduce first current year, then previous three tax years in FIFO basis. First, now 86,000 is my contribution, so 4,000 is the annual, 40,000 is the annual answer, and previous three tax year first will be you considering this, then previous three tax years. So 2021, let's take example, it is 10,000, then 21 22 it is 5,000, 22 23 10,000. So this is the order, this is the contribution, but annual allowance will be reducing in this manner. I hope this is clear, students. Now we have some small topics left, so we'll be covering this and this chapter will be completed, students. I hope this is clear. Please do solve many questions so that you have a good understanding of these topics, students. Now coming to accessing the pension fund. When we withdraw the money from the pension scheme, the funds in the pension schemes cannot be accessed by the individual until he, she or they reaches pension age. Each pension scheme will have its own scheme rules regarding where an individual can access the pension scheme funds. However, the minimum pension age can never be below 55. So the person must be more than 55 years to withdraw the pension fund amount. And it will depend on the scheme also. Some schemes can have 60, but the person should not be below than 55 years. He must be more than 55 years. Individuals, this all are theory, students. Theory, you need to have a understanding. Individual with money purchase scheme have complete flexibility in the way in which they can access the accumulated funds in their pension schemes when they reach pension aim. So under the money purchase scheme, that is defined contribution scheme, they have some flexibility how the individual can withdraw the amount. 25% of funds can be withdrawn lump sum. Means, for example, 100,000 is withdrawn, 25% can be, this is the value of the scheme, total value of my fund, 25% can be withdrawn as tax free. The balance remaining 75% of the fund can be accessed in a variety of ways, including purchasing an annuity to suit the individual circumstances to provide income for the individuals in their retirement. Means 25% will be tax free, no tax on it, but the 75% remaining will be taxed as non-saving income. Non-saving income under the accrual basis, we have seen there is a pension income, it will be a pension income for the individuals. Withdrawal from the balance of the funds are treated as non-saving income in the tax year. They are withdrawn at the normal rates at 20, 40 or 45. I hope this is clear, students. In the year in which we withdraw, in that year we will be taxing it. I hope this is clear. Means in that year only it will be accrued, it will be cash, we'll be earning that income. So I hope this is clear. Now coming to the lifetime allowances. Once invested, funds in a pension schemes are accumulated and grow in a value tax free. There is no restriction on the total contribution that an individual may make into a pension scheme. There is only limit upon the annual contribution amount on which tax relief is available. We have seen the maximum annual amount. In order to prevent wealthy people accumulating large sums in pension funds which can grow tax free, there is a maximum limit to the amount that an individual can accumulate in the pension scheme tax free. So an individual can accumulate the amount tax free till certain limit, because if there is no limit, they will be accumulating and there will be no taxes, known as lifetime allowances. So lifetime allowance is the limit. That means An individual can accumulate large sum of money into the pension scheme up to a limit. The lifetime allowance is 1,73,100 pounds. So 1,073,100. This is the limit, students. This is the lifetime limit. This is the lifetime limit of 1,073,100. If further it is that, then it will be taxed. This all will be till here it will be tested in your exam. This will be tested in theory question for 2 marks, but this will not be tested. This is for your general understanding, students. So the lifetime allowance limit is 107,300. Considering when a member becomes entitled to withdrawal benefits out of the scheme, for example, when the individual becomes entitled to take an annuity or a lump sum payment. The lifetime allowance is included in the tax rates and annual and allowances provided in your examination. This will be provided in the examination. If the value of the pension fund exceeds the lifetime allowance, an additional income tax charge rises on the excess fund value, that is excess value above 107,300 when the individual withdraws from the scheme. The detailed rules for the income tax charge are not examinable. So only you need to keep in the mind 107,300. This is the lifetime allowances. Below this, if you withdraw, it will be taxed at 25% lump sum. After that, remaining will be taxed at non-saving rate as the way you receive your pension income. I hope this is clear, students. Withdrawn at normal rate when they are withdrawn. I hope this is clear. 107,300. Before this, lump sum amount is withdrawn, 25% tax. No tax. Lump sum below this, 25% can be withdrawn as no tax. Further, the income we are receiving as further non-saving, it will be taxed at non-saving rate at 20, 40, 45, further 75%. So below 107,300 students, 25% lump sum amount can be withdrawn tax free, and the rest 75% will be taxed under the saving income as we withdraw it. But if the value of the pension scheme is more, then if the lump sum amount is withdrawn, it will be taxed as 55%. If rate of charge is 55 if the excess value taken as lump sum, or 25% if the funds are used to provide pension income. So above this, lump sum amount is withdrawn, 55% charge. If it is kept within the fund, 25% charge, and further non-saving rate 20, 40, 45. This will not be tested, students, just for an understanding. Please do not learn this. Only keep in mind the lifetime allowance limit. This will be provided in the examination. If above this, you have different charges, and if below this, you have the charge of 25% fund can be withdrawn tax free. The rest 75% will be taxed at non-saving income as we earn our pension income in the tax year in which we withdraw. I hope this is clear. By completing these small theory portions, we are completed with our pension chapter. So I hope, students, today's session was interesting and you do not have any doubt. Please do solve many questions, students. Please do solve many questions. Please do solve many questions so that you have a good understanding on these topics, and mostly the annual allowance part. You need to have a good grip on this part, and when the annual allowance will get tapered, annual allowance is 40,000. This will be increased if previous 3 tax year unused annual allowance is available. This 40,000 of current year can be tapered. If our AI is more than 240,000, AI is calculated net income plus employees contribution to occupational pension scheme, employees contribution to any pension schemes. I hope this is also clear. And when we reduce the amount of pension contribution, first we'll reduce 40,000 the current year's annual allowance, then previous 3 tax year in the FIFO basis, that is first is 2021, then 21-22, then 22-23. I hope this is also clear, students. Please do solve many questions. If you have any doubt, please do join the WhatsApp group so that you can ask your doubts to other students and you can clarify your doubt. I hope today's session was good and no doubts. If any doubts, please do ask in the WhatsApp group. And bye students. Thank you. Have a good day.